Welcome back. As promised, let's get chatting with the management of Samhi Hotels. Remember, they listed a couple of weeks ago. So this is the first quarterly results that the company has posted. This is the Q1 results. That's the April to June quarter. And we've seen their EBITDA and margin both contracting year on year. However, remember the net debt too has reduced from over 2,800 crores to around 1,800 crore rupees. We have with us Ashish Jakhanwala, who's the chairman and managing director of Samhi Hotels. Thanks a lot, Ashish, for joining in. We're talking post the end of the second quarter, and this is just the first quarter numbers that you've reported. Be that as it may, just wanted your thoughts on how the second quarter has been as compared to the first quarter. Has there been a big change? And most notably in your finance costs as well, which has come down in the first quarter year on year, but is likely to fall a lot more in the second quarter onwards, right? Can you give us a sense of where both those parameters have been?
So thanks for having me here. So first, I think what's important to highlight is that we've seen very reasonable revenue growth, even in the first quarter, about 14% or so over the last year. EBITDA at an asset level has also grown at about 12.5%. Having said that, when you make certain adjustments for one-time expenses in ESOP, that's when you see probably some decline in the reported EBITDA at a consolidated basis. So this is a clarification that we've actually seen a reasonable growth in first quarter at asset EBITDA level before we knock off the one-time expenses. In terms of finance cost, you're absolutely right. Like to like, our finance cost has actually come down from almost 136 crores to 107 crores. That's last quarter one FY23 comparison to quarter one FY24. And we actually expect this to go down to as low as 60 crores by quarter four this fiscal year. So quarter four FY24, we expect the finance cost to have come down almost from 136 crores to just about 60 crores. So that's a big positive shift that we would see in our P&L in the next quarter or so. As about quarter two, you're absolutely right. We have reported quarter one because, as you know, in July, there's a new regulation which requires any public company to report prior period within 21 days of listing. So this is just complying with that regulation. But what we've seen is that our RevPAR, which is an important measure, which is revenue available per room, the RevPAR has grown in the first quarter at about 14% or so. Early indications are that in the second quarter that has grown at about 15%. So we actually see a good growth in RevPAR year on year that continues to strengthen as we go into a strong season of quarter three and quarter four. So generally trends remain fairly encouraging.
All right. Hi, Ashish. Good morning, and thanks so much for joining in. Well, as you speak, I think the stock has recovered a goodish bit from the low point of the day as well. If I'm not mistaken, it opened up in the red, but now it's seeing a bit of a recovery. Give us a couple of numbers, though. As you said, your finance cost from around 130 crore odd. By the end of this year, it goes down to around 60 crores. So what is the absolute debt number that you have, and what does it go down to?
So, we had a net debt of about 2,850 crores prior to the IPO. As of today, that number is 1,830 crores. So we've almost reduced the debt by over 1,000 crores, largely using the IPO proceeds. So that's one big shift in company's balance sheet. Will have an impact on both its profitability and also ability to generate free cash for subsequent growth. So that's one. The second I will highlight, as I told you, that we did a revenue of about 191 crores for the first quarter. This is without assuming the impact of the acquisition which got closed in August, the ACIC acquisition. So 191 crores is a growth of about 14% over the prior period, over the same quarter last year. The asset EBITDA was about 72 crores, which was a growth of about 12.5%. Now, as you know, in August, we closed the acquisition. So if you include their numbers on a pro forma basis, our actually first quarter revenue was about 241 crore, asset level EBITDA of about 88.5 crores. And then you have some corporate G&A which remains fixed in the zip code of about 7.5-8 crores a quarter. But after that is a big one-time expenses of about 11.5 crores per quarter for ESOP, which actually only comes up until the end of this fiscal year. And after that, it reduces to almost 4.5 crores a quarter. And there are some other one-time expenses, about 5 crores a quarter, which also goes away from quarter three onwards. So I think asset level EBITDA gives you a good indication of what the health of the business is. It has grown at about 12.5%. The acquisition will obviously change our P&L substantially over the next few quarters. And on the other hand, the leverage has substantially come down. Cost of financing, as I mentioned earlier, from 136 crores will be just barely about 60 crores.
Right, Ashish, let's talk about the acquisition itself. You said that, that will start to reflect in your numbers. It's a 962 room acquisition. How much will that add to your overall revenue? And on an EBITDA standpoint, you are looking at significant synergies, right? So what are the current operating parameters of the acquisition? when do they come back to your normal operating parameters? If you could give us a sense of what your P&L looks like, including this acquisition, and at full scale, what does it look like?
So as of today, if you see first quarter, which is prior to actually us completing the acquisition on a pro forma basis, right? We did a revenue of 191.4 crores. And if you include the acquisition, that grows to 241 crores. So the contribution from the acquisition is about 50 crores a quarter on the top line, right? Now, our portfolio has been operating at a asset level margin of about 38%, which includes some rental expenses. So actually, EBITDA margins is about 39.5%, right? The acquisition that we made, like to like, is at about 36 odd percent, 35, 36%. So the first thing, which is pretty much a low hanging fruit, is once we integrate that portfolio with that of ours, we expect that margin of 36 odd percent to move to 39.5, 40%, right? Now that's easy because all of these hotels are Marriott branded hotels. They're currently under franchise agreements. We have a very large portfolio with Marriott, including a shared services center. So we actually start integrating these hotels with our shared services center starting October onwards. So I think from January, we will be able to see a significant benefit coming from the integration. But at a financial level, quarter three will be the first quarter when we'll report the two entities collectively. But we have been showing pro forma just so that investors can understand that if we had made this acquisition at the beginning of the year, what would the impact of that be? So the revenue would have been 241, EBITDA would have been 88.5 crores.
We've got everything together. Ashish, just one number now. When do you get into the black? Net profit, when do you deliver?
So just, quick mathematics, we had a loss of about 83.5 crores in the first quarter. The PAT loss was 83.5 crores against a finance cost of 107.7 odd crores, right? That 107 crores will almost become 60 crores. So that 83 significantly reduces by almost 45 crores just by adjusting the finance cost, even if I have no growth in EBITDA, right? So what you would see actually is that by quarter three, quarter four, as we see EBITDA growth continuing in the zip code of, let's say, 12, 13, 14%, right, which is what we've seen in the first quarter, the finance cost has come down substantially. I actually think before the end of the fiscal year, we have a fair shot of being profitable. But more important than that, we have about 30 crores of depreciation expense. We have about 11 crores of ESOP expenses this year. So about 41, 42 crores is non-cash expenses. If you, for a second, adjust that, the company will start producing free cash from quarter three onwards itself.
Okay. All right. Ashish, thanks a lot for joining and giving us all those details. Let's see whether or not by the end of this year you turn into the black, but you're clearly sounding very, very confident about business from here on. We look forward to having a chat with you as and when you declare your numbers. Bye.